Welcome back to Investing Talk podcast. Today we're taking a close look at Coinbase Global. You sent us a collection of information, and our mission is to sort of distill it down to what you really need to know. We'll explore their business, recent performance, financials, potential pitfalls, and, where they might be headed. Okay, let's unpack this and see what stands out.
Sounds good. It's interesting to see how Coinbase has really established itself. Founded back in 2012 by Brian Armstrong,
Right?
they've become, well, a pretty central platform, haven't they, for both everyday investors and the big institutions wanting to deal with crypto.
Across loads of countries, too.
Over 100, I think. And their business model, it's not just trading, it's facilitating transactions, custody services.
Holding on to the assets for people.
Exactly. And even providing integration tools for developers and businesses getting into the space.
Yeah, they're definitely more than just a place to trade. When you look at what they offer, you've got the main Coinbase platform, then there's Coinbase Pro, which is more advanced.
For the serious traders.
Right, and Coinbase Wallet for holding your own keys, your own crypto, plus APIs, developer tools.
And they're branching out, aren't they? Services like staking and lending.
Staking, yeah, where you can earn rewards on certain cryptos. Kind of like earning interest, And it's pretty remarkable. They're the top crypto exchange based in the U.S. and a huge custodian of Bitcoin, holding over 12% of all Bitcoin.
That 12% figure is really something. It highlights just how significant they are in the ecosystem.
A massive responsibility, you'd think.
It really is. It underscores their importance, but maybe also touches on potential systemic considerations, though their compliance focus tries to address that.
Yeah.
Now, if we look at how they've been doing recently, well, the first quarter of 2025 gave us some things to chew on.
It certainly did. They brought in $2.03 billion in revenue, which sounds great, a 24% increase year over year.
But
it was actually below what analysts were expecting. They thought it'd be closer to $2.12 billion.
And the same story with adjusted net income. $526.63 million, or 1.94 per share. Again, missed the estimates.
Yeah, and we saw the stock price react, didn't we? Dropped about 3% in extended trading after that earnings report on May 8th.
Even though Bitcoin itself had actually rallied earlier that day, lifting the stock about 5% during regular trading.
Right. So that rally wasn't enough to overcome the earnings miss, it seems. And the stock, well, as of that date, it was down around 17% for the year.
It really shows how sensitive the market is to meeting those expectations, especially in this space. Huge year-over-year growth, but still punished for not hitting the forecast number.
And it wasn't just the Q1 numbers. Their guidance, their forecast for the second quarter's subscription and services revenue, that also fell short of analyst estimates.
Which is interesting because that subscription and services part is key to their diversification story, moving beyond just trading fees.
Good point. If we look at their overall financial health, though, going back to the full year 2024, the picture looks pretty solid.
Yeah, 2024 was strong. Revenue was $6.56 billion. Operating income, $2.31 billion.
And net income was positive, too, $2.58 billion for the year.
Solid numbers. And their balance sheet looked healthy. Total assets around $22.5 billion. Total equity, $10.3 billion.
Okay, but then zooming back into Q1 2025, revenue was $2.0 billion, so actually down about 10% from the previous quarter, Q4 2024.
Right, a sequential decline there. But like you mentioned, that subscription and services part, that actually grew by 9% quarter over quarter, hit $698 million.
So that diversification engine is still running, even if overall revenue dipped a bit from the prior quarter. And they were still profitable in Q1, $66 million net income.
Also very important, their liquidity position. They reported having about $9.9 billion in USD resources as of Q1.
That's a lot of cash.
It is. It's just strong liquidity, low leverage. That's a good position to be in, especially in a volatile market like crypto. Their adjusted EBITDA was also strong, $930 million in Q1, shows good operational cash generation.
Now, something else that made headlines was the announcement about Deribit.
Ah, yes, the acquisition.
They're buying Deribit, which is a crypto options exchange, for a pretty hefty price tag, $2.9 billion in cash and stock.
That's a major strategic move. It's clearly about expanding their offerings, especially in the cryptocurrency derivatives market.
So not just buying and selling Bitcoin, but futures, options, that sort of thing.
Precisely. Derivatives let you bet on future price movements without owning the underlying asset. Bringing Deribit in gives Coinbase a serious platform for that, which likely appeals more to sophisticated institutional players and active traders.
Could potentially mean more revenue per user, maybe. And stickier customers.
That would be the goal, I imagine. Create a more complete ecosystem for different types of crypto investors.
Okay, so stepping back a bit, when we look at the whole picture, what are some of the, let's say, red flags or potential risks we need to keep an eye on?
Well, regulation is the big one. Always is in crypto. Changes there could really impact Coinbase's operations, maybe their profitability.
It's a constantly shifting landscape.
It really is. And then there's the market itself.
Uh,
Crypto is volatile, we all know that. That volatility directly affects trading volumes, which hits their transaction revenue.
if Bitcoin's quiet, fewer people trade.
Pretty much. And broader macroeconomic uncertainty, things like global trade policy worries, that can also dampen enthusiasm for trading riskier assets like crypto.
Makes sense. But on the flip side, what are their core strengths?
Well, they are the market leader in the U.S. That's significant. They've built a strong brand, a degree of trust.
And they cater to both retail and institutional clients.
Right. That diversification of customer base is key. Plus, as we mentioned, that strong liquidity, the cash reserves, that gives them flexibility.
And their focus on regulatory compliance, you could argue that's a strength too, especially longer term.
Absolutely. It can be a competitive advantage, particularly compared to some global exchanges that might operate in regulatory gray areas. Plus, they're expanding into new areas like prime brokerage services for institutions and blockchain data analytics.
So, thinking about those competitors,
Mhm.
who are they up against mainly? Binance comes to mind.
Binance is the giant, globally, yes.
Yeah.
Kraken is another significant player. FTX was mentioned in the sources. Obviously, that situation has changed dramatically.
So, Coinbase is big in the US, but Binance is the global leader.
That's generally the picture. But Coinbase's focus on compliance really differentiates it, especially within the U.S. market.
Yeah.
And they are investing in innovation, NFTs, DeFi tools, trying to stay relevant.
Okay, so looking ahead, what are some potential catalysts? Things that might move the needle for them?
Well, obviously, future quarterly earnings reports will be key, seeing if they meet or beat expectations.
Any regulatory developments, positive or negative?
Definitely. Big impact potential there. And new product launches. How well do their pushes into DeFi or NFTs actually take off?
And the main risks hindering them? Still regulation.
Yeah, stricter rules could limit services or just increase their costs significantly. And of course, a major downturn in the crypto market itself would hurt trading volumes and revenue. Those ongoing regulatory challenges, potential global trade issues impacting sentiment, they all remain factors.
It was interesting seeing the analyst reaction to Q1 seemed like the miss against expectations was the real driver of the negative stock move.
Yes, expectations matter a lot. And you mentioned sentiment online is a bit mixed.
Seems so. Some excitement about the Deribit deal, seeing it as a smart strategic move, but also, concern over those missed earnings numbers.
It highlights that classic tension, doesn't it? Balancing strategic long-term bets, like a major acquisition, with delivering consistent short-term financial results that the market demands.
So, based on all this information we've sifted through, what's a sort of summary view for someone considering Coinbase?
Well, look, based on this data, Coinbase is clearly a major force in the crypto industry. They have a strong financial position, market leadership in the U.S. That's the positive side. But the stock's performance is undeniably tied very closely to regulatory risks and the wild swings of the crypto market itself. So for current investors, maybe it's a hold. See how this Deribit integration plays out. Watch the regulatory scene.
And for someone new thinking about getting in?
It could be a buy, potentially. But, and this is a big but, only for investors with a really high risk tolerance, specifically for the crypto sector, you have to understand and be comfortable with the potential for significant volatility.
Okay. So what does this all boil down to for you, the listener? Coinbase is definitely navigating a very dynamic, often unpredictable market. The recent earnings miss and that big Deribit acquisition highlight both their growth ambitions and, well, the challenges they face. The key takeaway seems to be this really strong interplay between Coinbase's own performance, the wider crypto market mood, and that ever-present regulatory shadow. Which leads to an important question for you. How does Coinbase's strategic push into derivatives with Deribit, even coming after missing those earnings targets, fit into your investment strategy? And importantly, your personal comfort level with risk in this volatile crypto space.
We definitely encourage you to do your own further research. Keep an eye on those upcoming earnings reports, and any regulatory news is crucial. Thanks for letting us unpack this for you today. Please subscribe, like, and comment. It really helps us out.